So, Jack, we were just talking earlier about the tariffs and the actual number between the U.S. and Canada. Trump was saying 200 billion in difference, and you were mentioning that is not correct. Let's start there.
The actual trade between the two countries approaches $1 trillion a year, but it's not balanced. The Canada exports the United States $43 billion more of goods a year and services than it imports the United States. So the U.S. shows a trade deficit of $43 billion. Just to put this in perspective, the same thing with China is $400 billion. So there's no comparison here. And Canada is, in a way, it's our third largest trading partner in the United States, but maybe it's the most important trading partner in my point of view. I'm in Detroit, and very recently the American president said he wants to return the manufacturing of cars back to Detroit. I think he should talk to the people who actually organized and ran the United States automotive industry, because they chose to go to Canada for manufacturing. Canada didn't choose them. And the president doesn't seem to understand that in order to provide lowest cost cars, most efficient cars to the U.S. market, the American automotive manufacturing industry has chosen Canada and Mexico as their sources. Now, the problem here is that it's not just finished cars, which are many, many billions of dollars of import from Canada. Imagine that Ford and General Motors cars suddenly have 100% additional cost to the manufacturer. Okay, so the manufacturer's cost now doubles. What do you think is going to happen to the selling price of those cars in Poughkeepsie, Detroit, and Ashtabula? Well, it's going to have to go up dramatically. The margin on a car is very low, the actual margin. So let's say, for argument's sake, that the gross margin might be 20% or 25%. So if the average cost of a car today in the United States is $50,000. Okay, that's the average. Let's say that $37,500 of that is the actual dealer's cost, the actual manufacturer's cost. Let's add 100% to that. Now its cost is $75,000 for that same car, because no matter what the President of the United States thinks, you cannot simply move factories or repurpose them overnight, even if you could. Oh, by the way, he's added a tariff on steel and aluminum. And of course, we get billions of dollars worth of these formed products from Canada. And guess what they're used for? That's right, making cars. So it's another cost. So now we're looking at, let's say I have to sell a Chevrolet SUV, a nice one, to $125,000. No joke, because of the cost of these tariffs. Well, I don't think I'm going to do that because I don't have $125,000 for a car when my bank wants 7% interest on the car loan. So I'd have to choose between selling my body parts or having a car. Well, I'd like to keep most of my parts. I won't do that. It is foolish in the extreme, because the devil is in the details, as John Maynard Keynes used to emphasize. And I don't think our national government has worked out the details. The reason for this tariff talk is because of the massive American deficit spending. I understand that the President of the United States is trying to up the revenue of the central government. So tariffs are a good way. People don't realize we've had tariffs for a long, long time. All the nations of the world have tariffs. Okay, and the American tariffs are bringing in about $100 billion a year to the Treasury. But let's say Trump puts 100% additions on tariffs. So now it'll bring in 200 billion, right? That's great. And the way Congress scores these savings or additional revenue, they multiply by 10 to pretend that in 10 years we'll actually get that money and that all of our other spending will hold constant, so that'd be $2 trillion against a deficit. Whoopee, great, terrific. Except, of course, from the recession in the United States that will follow the collapse of the average person's ability to buy a car or a house or candy bar will sort of wipe out those additional numbers. And does anybody think what's going to happen if the countries against which the United States imposes these large tariffs retaliate or say, you know what? Yes, the U.S. is the world's biggest market for manufactured goods, probably, and for cheap underwear and toys, no question, probably. They'll seek other markets. The global South is going to really benefit from this because the Chinese stuff has to go somewhere. Okay, the Vietnamese stuff. By the way, Vietnam is, we have a huge deficit with Vietnam, multiples of what we do with Canada. Anybody worried about that? I don't think so. Okay, so this is an underthought situation. And I understand there are pros and cons. All we seem to hear are the fantasy pros of the United States and none of the cons. To me, this is a con job.
Okay, so I have a next question for you. It has to do with the threat last night that 100% tariffs will be deployed on Canadian cars.
Mm-hmm.
Can you talk to us a little bit about that?
Yes. What Canadian cars would that be? All cars manufactured in Canada are manufactured by companies centered in the United States, Japan, Korea, places like that, Germany. Okay. So that would be 100% tariff on American cars, on German cars, on Korean, Japanese, and of course we couldn't afford them, so that would stop their manufacturing in Canada, and then the turmoil of price and cost would certainly, I doubt that the American car companies, which have borrowed to the hilt for the EV fiasco, $146 billion so far they put into EVs. General Motors lost $5 billion last year in EVs. Ford lost $5 billion. General Motors is taking a $5 billion write-off on its Chinese business, which is being beaten out by Chinese domestic cars. Do these companies seem to you like they're going to say, oh, we'll just borrow another $50 billion from, I don't know, maybe some guys on the street or whoever, and we'll build more factories, and well, gee, we can't import Canadian steel or aluminum to make the cars because it's too expensive. The American steel industry is raising their prices to match the new prices from Canada, so that's getting expensive. You know what? We'll just shut those factories down. We can grow marijuana in them because cannabis is now legal, I think, in Michigan. So we can grow marijuana in them. And those guys that work there, there's plenty of cardboard boxes for them to live in. This is nuts.
So my next question is about steel specifically. It's my understanding that a fifth of all steel that is in the United States or used, it comes from Canada. Mm-hmm. How will that impact the American market or Canadian market?
Well, the steel industry in Canada is smaller than the steel industry in the United States, but it's more efficient. So we buy Canadian formed steels to make products. A lot of them are made in Canada, like, for example, by the car makers. That you don't make a car by molding it in clay. You have to form steel and aluminum and brass and copper parts, and then you assemble them. Those factories we talk about as car factories are assembly factories. Interestingly enough, the largest auto parts supplier in North America, I believe, is Magna of Toronto. Gee, so all the things we buy from Magna for cars, will those be tariffed at 100%? Because Magna supplies parts not only for Canadian cars, but all over North America. So that'll be some new costs too. And the steel industry in Canada, well, maybe if Canada repurposes its industries to supply other markets besides the United States, they might prosper. I was thinking actually that if the American car makers, either if they survive or if they sell those factories to Canadian investors or American investors who have foresight, they can keep making cars and sell them all over the world rather than just the United States, because the United States will have 100% tariff, so cars will be too expensive here, and other countries that need cars, like all the countries of South America, Africa, parts of Asia, India, they could probably use the cars. And I know this is a little far out for the audience, but I've always been an admirer of the Commonwealth. And I've always thought the Commonwealth should be the successor to the imperial preferences of pre-World War I as a great trading bloc. So I can see Canada and India getting together, Canada and Australia. You know, Australia doesn't make cars, Canada does. What a great market. Okay, so none of this has been thought out by the concrete-filled heads in Washington. And they're going, oh my God, how could, they never foresee obvious consequences. Everything is of the moment. And this is the problem. This is a problem that didn't need to exist. Once it exists, it'll be baked in, and God knows how long it'll take to figure out. This is the worst thing possible for American-Canadian relations.
So on that note, we were discussing a private meeting that two countries were having, or a country was having with Canada. Well, I'm not going to disclose who that country is, obviously, but they were discussing their critical mineral strategy moving forward. Can you talk about the impact that Trump's communications are having towards forcing, for instance, Canada to be looking at partners they might not have otherwise considered? Can you comment on that?
Well, yes. I've from Washington, and I assume I actually heard President Trump say something about rare earth. I don't think he knows that they are the rare earths. I have no idea what rare earth is. Okay, but he said there's $500 billion of that in Greenland, and I suspect, like Queen Victoria before him, he can say, we'll just simply acquire that to bring the light of civilization to those in heathen darkness, or some crap like that. The thing is, Greenland and Ukraine, these are ridiculous. They're not sources of critical minerals. Canada, Quebec has more rare earth deposits, discoveries that I know of than any other location in the world. Ontario has everything. No kidding. I mean, most of the critical minerals for high technology. Certainly in Western Canada, we have lots and lots of them. And the problem in Canada is capital, isn't it? Okay. I mean, if Wall Street replaced Bay Street physically, then Canada would be developing critical minerals projects all over the place. The issue is capital. So again, if Canada were to ally itself with a group of nations, in my opinion, and create a capital focus on developing these critical minerals, that would be wonderful. And I don't see if Wall Street were populated by anything but greedy gnomes, then they would. I'm thinking of this. They haven't thought of it. I mean, Why aren't we investing in Canada to develop these critical minerals? You know why? Because we're short-sighted.
So my next obvious question, speaking of short-sighted versus long-sighted, we've discussed this over the years, is the impact or the advantage we're handing over to, of course, China, who's always had a long-sighted vision for their markets and economic infrastructure.
Right.
Can you comment on this?
Well, the Chinese figured out, I don't know, 25, 30 years ago, that in order to have an industrial-based society, they needed the total supply chain. And they looked and they said, okay, we understand steel and copper. What's this other stuff? We have rare earths. We've been exporting them to the West. Why? And then they looked and they saw all the products that you could make from rare earth-enabled electronics. And they said, we've got to do this. And they said, well, we need not just minerals, we need processing. And then as time went on, they found that, gee, maybe we can get some of these minerals overseas at the ones that were deficient. They are deficient in some, okay? So they went out and they said, well, we can't conquer these countries like the Europeans did, so we're going to buy these things. So they own or operate, for example, 100% of the world's sources of heavy rare earths. Without heavy rare earths, you can't make the magnets for EVs, wind turbines, or anything else. We can't make them without Chinese heavy rare earths. And guess what? The Chinese do not sell them to us. Think about it. Now, are we focusing on creating a heavy rare earth industry? No, because the heavy rare earths in this hemisphere are in Brazil, and the United States doesn't have any. In Europe, they don't have any. They're all in Africa. But see, we have to think about this. And as somebody keeps saying, when African or South American countries talk to China about development, China gives them a railroad, schools, and people to help out. The United States gives them a discussion and a study group. Okay, so who's going to prosper? The Chinese have figured out how to get the maximum value of critical materials from the entire world into their country and utilize them to develop China. Now, try to put America in that sentence, see how it works out for you.
Jack, I can't thank you enough for your update today. And for everybody interested in more information on the Critical Minerals Institute, to which Jack is the co-chair, please go to the following website. Thank you, Jack.
You're welcome.